So let's talk about something that's, well, pretty frustrating. Ever been told no when you applied for life insurance? It feels a lot like you're lost at sea, right? Well, think of this explainer as your compass. We're going to figure out why some folks get slapped with that high risk label and, most importantly, show you how to find a way to get covered, even if you've been rejected before. It's just so frustrating, isn't it? And you'd be surprised how many people go through this. You get that denial letter, and it just feels like a total dead end. It makes you start to wonder, is getting coverage even possible for me? But here's the thing, and this is really important. Getting denied does not mean you're uninsurable, not at all. It usually just means you took a wrong turn somewhere in that confusing application process. So the key isn't to just throw your hands up and give up. It's about finding a much smarter way to go about it. All right, so first things first. What even gets you that high-risk label to begin with? Let's break down the stuff that tends to make insurance companies a little nervous. Okay, so when you boil it all down, insurance is basically just a giant numbers game. It's all about risk. Every single thing on this list, whether it's a health condition or a hobby like skydiving, is a little data point. And for the insurance company, each one adds to the statistical risk. That's it. That's the reason why you might see higher prices or sometimes a flat-out no. Now, to play this game, you kind of have to learn the language. The whole underwriting process is filled with its own jargon, and these terms really do decide what happens with your application. So let's decode this map together. First up, you've got ratings. You'll hear words like standard, preferred, or preferred plus. These are basically health classes, and they set your starting price. You can really think of it like getting a grade on your overall risk profile. And just like in school, the better your grade, the lower your price is going to be. But what happens if you don't quite ace the test? Well, that's where something called a table rating comes in. It's basically the insurance company's way of saying, okay, yeah, we'll cover you, but we're going to have to bump up the price by a certain percentage because of the extra risk. So it's an approval, but it definitely comes with an asterisk. And then you've got flat extras. This one's pretty simple. It's just a flat fee, a set dollar amount they tack onto your premium for one specific risk. Maybe it's a dangerous job or a past health issue. It's just another tool in their toolbox to balance out the risk before they hand you that policy. Okay, we've talked about the roadblocks. We've decoded some of the jargon. But what I'm about to tell you now, it is, without a doubt, the single most important rule of navigation. This is the secret sauce. This is how you win the game. Ready? Here it is. Not all insurance companies read the map the same way. They don't all play by the same rules. Let's take a look at this example. Someone with well-controlled type 2 diabetes. Now, carrier A, they might actually specialize in this. They get the details, they look at your stable A1C levels, and they'll offer you a great rate. But carrier B, they might just see diabetes on the form and bam, automatically jack up the price or even say no. You see, this is the game changer right here. It's not a one-size-fits-all situation at all. Your goal is to stop throwing applications out there and just hoping for the best. The real strategy is to find the perfect fit, to match your specific situation with the one carrier that's going to look at you and say yes, with a price that actually makes sense. So that brings us to the how. I mean, knowing that all these companies are different is great, but how do you actually use that information? Let's talk about plotting your course with a much, much smarter strategy. Think about it. You wouldn't start a road trip without a map or a GPS, right? Applying for insurance is the same. Instead of just launching your application into the void and hoping it lands somewhere good, a strategic process is your navigation system. It helps you steer clear of the rocks. You know, those pointless denials that can actually ding your record, and it guides you straight to your destination. And this is what that navigation plan looks like. It's a simple 4-step process designed to find the absolute path of least resistance. First, we pull together all your key info. Then, and this is the magic step, we send out an anonymized risk profile to a bunch of different carriers. We're basically testing the waters to see who's interested before you ever fill out a real application. You get to see the early offers, compare them side by side, and then, and only then, do you move forward with the full application to the one that already looks the most promising. I can't stress this enough. That pre-screening step is everything. It's like sending a scout ahead on a trail to check for danger. You get to find out which carrier is going to be the most welcoming, all without ever putting your official application on the line and risking another rejection on their record. Okay, this all sounds good in theory, right? But does it actually work in the real world? You bet it does. Let's look at a couple of quick stories that show just how big a difference this can make. All right, first case study. This is a super common one, dealing with tobacco use. A lot of insurance companies have a really strict definition. If you vape, smoke the occasional cigar, whatever, to them, you're a smoker. And that means your rates are going to be way, way higher, period. So, the typical way this goes, you apply, you check the box, and you get slammed with those expensive smoker rates. End of story. But with the strategic approach, we hunt down those few carriers that have more modern, lenient rules, the ones who might actually offer you non-smoker rates. And believe me, that completely changes the game. And the result in this actual case, a 30% savings on the premium. 30%. That is a massive difference. And here's the kicker. Nothing about the person changed. All that changed was the strategy. Okay, let's do one more. This time, it has nothing to do with health. It's all about a driving record. You might not think about it, but yeah, having a few speeding tickets can be a huge red flag for an insurance underwriter. And again, what happens if you just apply anywhere? You're probably going to get hit with one of those flat extras we talked about, making your policy way more expensive. But the smart approach? We find a carrier that just looks at driving history differently. In this real-life case, someone with 3 speeding tickets got coverage with 0 extra fees. It made all the difference in keeping their insurance affordable. Okay, we have covered a lot of ground. So let's bring it all home. What are the big things you need to remember? Let's boil it down to a simple checklist. So here it is, your navigator's checklist. First, and most importantly, a decline does not mean you're uninsurable. It's just a detour. Second, remember that every single insurance carrier has a different set of rules. Your job is to find the one whose rules work for you. Third, pre-screening is your absolute best friend, your most powerful tool. And finally, taking a strategic approach, maybe with an expert who knows the map, is how you flip a denial into an approval. Look, I get it. The whole world of hard-to-place insurance can feel really complicated, like this giant maze. But it's not impossible to get through, not even close. With the right map and the right strategy, getting coverage is absolutely within your reach. So I guess the only question left is, are you ready to chart your course?